right now, let's get down to some business. I believe we have on the phone with us Tory Parrish from Newsday. Hello, Tory.
Hi, how are you?
Good. How are you?
I'm fine, thank you.
Very good, very good. Well, this story now that you wrote, and this is in the business section of, is this going to be in Newsday this week, or?
I think it's in, I'm sorry, Brian, I think it's in the paper today, but I don't think it's in business. It might be out front, but I'm a business reporter. It was a business story.
Oh, okay. Okay.
Yeah.
And it's very interesting. The title I have here, Some Long Island Communities Socked by High Auto Insurance Rates, the report says. Okay, well, I'll always defer to you. You did the story. What's going on there?
Well, according to this company called The Zebra, it's an auto insurance search engine based in Austin, Texas. Rates are rising. They're at the highest they've ever been. They rose about 2.3% nationwide between 2017 and 2018. But nationwide, but New York saw a bigger increase. So New York State saw a 7.3% increase. The New York City metro area saw a 7.9% increase. And then you have, some cities within Long Island. The average for Long Island, some of the zip codes is higher than the average for the state, the nation, and the metro area, such as Roosevelt, which had the highest in Nassau County. The rate was $3,033 last year for car insurance.
All right. Okay,
yeah.
But then you do go on to say why you think that, or the information that you've gotten as to why they've all gone up.
Well, this company said there are, in general, their rates go up because there are more claims, more distracted driving. We all heard that story before, more people talking on their cell phones, texting while driving, more congestion. When gas prices go down, more people get on the road, so there's more congestion. And, there's congestion around here anyway, regardless. Right. So it worsens the issue. And New York's just an expensive place to live. I did talk to one expert who said at the an American Property Casualty Insurance Association, it's a trade group, who said it costs a lot more in New York. They pay out a lot more for accidents in New York. For crashes, injuries, lawsuits. It's just an expensive place to insure people. Right.
So, I noticed and this is very, maybe a naive question on my part, but I'm curious. Let's just say the person who's got a good driving record doesn't get caught drunken driving and isn't texting and all those things. Because the people around him may be doing those things and it's costing more for insurance companies, but he gets hit too. Yeah. So, in other words, the rates aren't just going up for the bad drivers.
No, they're for everyone because they take into account risk. So you might be a good driver, always follow the speed limit, don't text on your phone. You might be a great driver, but you're driving around people who are high risk who might hit you. Right. And if you're in New York, the chances are they might be paying out a lot more.
Right. Do you think that it would be impossible to penalize the people who are the reason for these insurance rates? In other words, let them pay the difference. Why should the guy who's always pretty good just because he lives there, why should he have to pay the bill too?
Well, the insurers say, they have to spread the risk to everyone. First of all, if they just did it for the person people who are the smaller percentage who are the cause behind it, they wouldn't get enough money to pay out those claims. And then another issue brought up, by one expert, is more areas that have a higher rate of minorities and have lower income. There's disparities there too. His quote is, this is a quote from him, "Minority zip codes always pay more. It may be less having to do with race as it is income. Insurance companies don't like low-income people." Right. So, he's with the Consumer Federation of America, a D.C. group, and they say, people who are lower income pay more even if they have, in general, even if they have perfect driving records. It's based on the risk in that area. Right. This is what they say. Right.
Right. To me, it's the analogous to that idea that poor people, like in New York City, if they can't afford transportation, they have to shop at the local bodega, and they wind up paying double
pay more, yeah.
Of what other people, yeah. And
just because of where they live.
Right. And this seems to be kind of the same thing. I can see how they justify, well, we have to penalize everybody. But it doesn't really seem fair, especially when some are just just about making it, and the difference in this insurance can literally put them out of business in a sense.
Exactly. Yeah. Like the rate in Roosevelt, $3,000
I know.
a year. That's per year.
Yep.
That's a lot of money.
Yeah. Yep. And I could also understand that if you're driving an $80,000 car, to fix that thing might be a little more. So okay, but that's probably not the case.
Not the case.
Yeah, because it was interesting when I first saw the title, "All our insurance rates are going up," that kind of thing. I said, "Okay, where's the news?" Everything is going up. It's like
it might be surprising though if you look at. So we have a chart prepared by an editor, Tim Healy, with the story. If you look at the chart with the story, you can sort by zip code, you can sort by price, by county. Right. It might be interesting that people might be surprised that Roosevelt pays the most in Nassau County. Number 2 is Hempstead. And 3 is Hempstead, 2 Hempstead zip codes. Then Uniondale, then Floral Park. Those are the top 5 in Nassau County. That might surprise some people.
Yeah, it would be interesting to compare that with the number of accidents in those municipalities, and you know what I mean, like follow the timeline back and see. Well, let's just see how it came about. I wonder if it would illustrate that. There were more accidents here, and it costs this much for. I mean, I understand like the people who fix cars. I'm sure their salaries are going up just like everybody else's, if they can. So materials cost more. And I think the way they build cars nowadays, some of them are built to crush, and the passenger cab is what's reinforced, not the rest of the car.
Interesting.
So when you have what used to be a little fender bender is now a complete, but that's. How did you feel about it after you did the story? I mean.
Well, I think it was very surprising for some of these towns. You made a good point about it would be interesting to see the crashes for these zip codes, and that's one thing I wasn't able to get in time for the story.
Right.
I have the statewide number, which is up, but I would have liked to have seen per zip code how many crashes there are, and I couldn't get that data in time from police agencies.
Right.
But I think it would really surprise a lot of people.
Yeah. If insurance companies will tell us as the buying public that, well, hey, we've got to raise rates, pick the percentage, whatever. It'd be nice to see them actually justify that in some kind of physical, or with some kind of numbers that say, oh, okay, we can see why you have to raise the rates. But we hear these same stories all the time. Well,
if they want to raise the rates above 5%, they have to get state approval, and state was not able to provide those numbers because I wanted to see which companies have gotten approval last year to raise rates, which insurance companies. I think that would have been interesting too.
Yeah, right. Wow. Well, is there anything else in the story that you think we should know?
Well, one of the consumer advocates, suggested some things that people can do to lower their rates, try to lower their rates. She suggested raising your deductible if you can afford it.
Right.
Meaning if a crash were to happen, would you have enough set aside to pay that deductible? So if your deductible, is $500, maybe consider raising it to $700 or $750.
Right.
She said avoid filing claims for small accidents. Like if you can pay for something small out of pocket, then do so rather than risk raising your premium for something teeny you could have paid for yourself.
Right.
Take defensive driving courses to remove points from your record. And also bundle homeowners and auto insurance with the same companies. Every time I call my insurance company, they always ask me that. I always decline, but maybe I should think about it.
Yeah, right. Well, I think a big issue in that is, yes, okay, it'll save you money bundling your car insurance with your home insurance, but what you really have to know is how do those companies pay off when it hits the fan, so to speak.
Yeah. It's great. That's a quote from her. The quote is, this is Toby Stanger with Consumer Reports. This is a direct quote. Get a company that is going to treat you well when you have a claim. That has nothing to do with saving money. So you can't always go for the cheapest. Look at reviews, talk to friends, family, and, don't just go with the cheapest. See who's going to treat you well if your house burns down, your car is flooded. who's going to treat you well.
Yeah.
That's important.
You know, it's funny you say that. I took that driver course. I don't know. I guess I'm probably due for another one soon. But the person who ran the course went around the room and asked, who's your insurance company? And as people answered, he said, okay, you'll get a 10% break on your insurance because you took this class. When he got to me, he said, what's your insurance company? I told him, and he said, you're going to get a 20% break. And I said, wow. And he goes, but you know what that means, don't you? And I said, no, what does that mean? He said, you're probably paying too high a premium. Mm-hmm. And I said, okay, but you know what? Anytime I've called that company, I never, in my history of driving, and that's 40 years, have had a problem when it came time for them to pay off a claim. So I said to him, my insurance premium is fine for me.
Mm-hmm. It's important. That's really important. When something happens that you feel like you're, it's a cliche, but in good hands, and someone's going to take care of you, or you're going to have to make a bunch of phone calls and be on your own and hitch your rides with friends and family.
Yep. And there's nothing worse than having to be your own advocate for a company who you paid premiums to year after year. And when you didn't have an accident, you didn't hear from them and they didn't hear from you. But all of a sudden, and now you're, like you said, you're on the phone every 10 minutes trying to get the customer service that you thought you were paying for that whole time.
Exactly.
Yeah, that's a big thing. That's really a big thing. So I agree with you. Price is not the only, but most people, I can't say most people, a lot of people will shop just for price.
Well, sometimes, people are in a bind. They're just trying to, as you said, just trying to make it, trying to keep going, doing the best they can. And sometimes you don't have that wiggle room, but if you do, you can't always look at price.
Yeah, no. I would really be interested if you do ever follow up that story, to really find out what's going on and if it does correlate to the higher rates, if it shows they really needed to do that. I think they'd be happy to know that, and we would certainly be happy to know either way.
Yeah, I'm definitely looking into that for a follow-up.
Great. I'll love to talk to you again about this.
Sure will.
Well, Tory, I want to thank you very much for calling us today, and also we want to thank Newsday for letting you do that.
No problem. Thank you so much. Have a good weekend.
You too. Enjoy. Bye-bye.
Thanks. Bye.
Well, we do want to thank Tory Parrish and all of the reporters that call us here on this week's Long Island News, and we thank Newsday for giving us the stories that we get to question them about.